I would simply say since 1789, the United States has a history of paying its bills on time. That's what the world wants to see, a continued commitment to do that. It's what underlies U.S. Treasury securities as the safest investment on the planet. And it's not an acceptable situation for us to be unable to pay our fees. And,
So that's the big word. Janet Yellen, the U.S. Treasury Secretary, comes out saying that the U.S. isn't going to be able to pay their bills in the next 2 weeks. That's pretty scary. It's basically the debt ceiling crisis that everyone's been hearing about. What happens is the United States sets a debt ceiling and they cannot spend more than that debt ceiling. And the problem is the U.S. is spending so much right now that they're going to not be able to pay their bills unless they raise the debt ceiling. Janet Yellen was talking about printing $1 trillion coin and having that be the added liquidity to the market. It's all a sham. They're all just printing funny money. The important thing is if they raise the debt ceiling, they're going to have to print more money, and then the issue is just going to continue to compound itself. So earlier today, Janet Yellen came out saying that the government's going to run out of cash by June 1st. So the Democrats want to raise the debt ceiling and print more money. So that had me wondering what's going to happen if the debt ceiling isn't paid. What happens if the U.S. can't pay their bills? And it's really interesting. As an initial reaction, the stock market will be in shock. Many believe it'll drop 40 to 50%, and there will be a huge loss in consumer confidence. I'm sure crypto will take a hit. All the stocks will drop, some up to 50%. Basically, the world will lose trust in the U.S., and it'll fall into an instant recession. Millions of people will lose their jobs. The U.S. credit rating would instantly be downgraded. So instead of having the good rating that we have right now, the U.S. credit rating would be restricted default, and U.S. Treasury securities would instantly be downgraded to a D rating. Those are some of the direct consequences, but that has irreparable harm to the image of the United States and the financial stability of the United States. And really that starts to trickle down to the rest of the world. The dollar is going to be worth less. That's going to crash other currencies, and that's really going to trickle down internationally. What's really interesting is what happens if they don't. How do they pick what doesn't get paid? They basically have enough runway for a couple months. If they don't raise the debt ceiling after a couple months, they're going to have to take extraordinary measures. And they would do things like suspend payments to government employees and government employee savings programs. When that happens, who's going to come to work for free? Things like the BMV might shut down. If they're unable to pay their employees, no one's going to come to work, and then those government agencies will actually shut down. Start under-investing into certain government funds, so a lot of the tax money that gets reinvested, they might just cut that off. They would delay auctions of securities, so banks won't be able to buy securities and earn yield, and that's how banks get paid. So it really just trickles down. Basically, people will lose jobs, prices will go up, there will be less money, they're going to have to print more money, which will cause further inflation, and it's just complete economic and financial disaster. And that's kind of where we're at right now with this whole debt ceiling crisis. So it's definitely something to keep your eye on. We'll see what happens over the next couple weeks. It's starting to get real when Janet Yellen's coming out and saying, hey, we only have a couple more weeks to pay our bills. It's now highly likely that the U.S. runs out of cash in early June. That's scary. That's imagine being a government employee. You're not sure if you're going to get paid. They're going to have to cut certain funding, and who knows what that's going to be. Hopefully they don't let it get there, but in the situation that we're in, someone has to eventually stop and say, stop raising the debt ceiling, stop printing more money. We're going to have to go through this hardship. Oh, this must be the exact letter. I noted that it's impossible to predict with uncertainty the exact date the Treasury will be unable to pay all government bills. I continue to update the Congress as more info becomes available. With an additional week of information now available, I'm writing to note that the estimate is highly likely will no longer be able to satisfy all the obligations as early as June 1st. Waiting until the last minute to suspend or increase the debt limit can cause serious harm to business and consumer confidence, raise short-term borrowing costs for taxpayers, negatively impact the credit ratings in the United States. In fact, we've already seen Treasury borrowing costs increase substantially. So it's just another thing, another domino falls. It really is wild.
Well, look, you know, the White House is negotiating in good faith with the Republicans to try to find a bipartisan solution. I don't want to negotiate in public and put down any red lines, but certainly the president has pointed out, and it's important for the American people to understand, we're all concerned about deficits and fiscal responsibility, but deficits can be addressed both through changes in spending and also through changes in revenue.
God, this lady's batshit crazy. But yeah, that's what will happen if they don't pay their bills. If the government can't pay their bills, then it's going to trickle down quick, and we're going to see stocks crash. We're going to see prices fly up, and it's going to be insane.